Alright, quick update on OGN. So in my opinion, we have just seen our first red flag warning signal in the market. Now I've been talking about this green box for OGN needing to hold, and you can see we've just broken below the minimum point of this green box, which was the 618 Fibonacci. We put in a daily close below the 618 Fibonacci, and now we are, heading back into the green box. But what's quite worrying is that, we're heading into the long-term moving average on the EMA indicators. So if we don't start flipping these EMA ribbons to the upside, this could simply be a retest of the daily EMA ribbons before we do start to roll over. You can see previously when the EMA ribbons fired a long signal to buy once the short-term moving average moved above the long-term moving average, we started to head up and we started to look bullish. We formed a bull flag and we did temporarily break out of it, but we never came down, back tested the 200-day. That was your first warning, and then we've come back down, and I've been saying this green box that I highlighted needs to hold, otherwise we are going to start flipping bearish. And on the daily you can see we've broken below these EMA ribbons and we're currently back testing them, and these EMA ribbons are starting to head down. So if we do just keep on sticking out around hanging around near this level, then the short-term moving average on the top of the EMA ribbons is going to start to head down and we're going to flip red, and in my opinion that is going to cause a momentum shift that is going to pull OGN to the downside. Now if we also look at the squeeze mom, which is the squeeze momentum indicator, also on the daily before we do move over to the 4-hourly, you can see we are starting to pick up some nasty red volume on the squeeze mom. And previously, whenever we've picked up volume like this, it has always been a telltale signal that we are about to flip super bearish. I mean, previously you can see the only times where we really only had a short-lived downtrend was when we flipped these, didn't have much volume to the downside, and then we started to move back up. But that's not what we're seeing right now. We're seeing momentum pick up. We're seeing the squeeze mom indicator basically show that we are heading down very strongly, and there is a lot of room to move to the downside, especially on the daily. Let's see what it's saying on the weekly. On the weekly, it's a slightly different story. On the weekly, it is basically telling us that we could have bottomed around this region, and this is just going to be, very diabolical for the next couple of days. So the weekly is really saying, as long as we hold the 786 down here at 39 cent, which in my opinion I do think is going to be a very strong level of support and we could definitely be moving down to, then this downtrend, we might not come down to take out these lows. That's what I'm seeing on the weekly. It looks like, obviously, because I said on the daily momentum is picking up, we could be coming down to the 786 and having a strong bounce and still putting in, less momentum before we do have that macro reversal on a lot of these altcoins. Because in my opinion, I do believe Bitcoin could be getting ready for one quick flush out to the downside to wash out the weak hands, and this could do a lot of fake outs on a lot of different charts. So keep your eyes on 39 cent. That is what the weekly is saying. Like I said, the daily is telling a different story. The daily is kind of telling me that we're pretty much going to be getting rejected from these EMA ribbons if we don't start moving up very strongly, and these are going to start to flip bearish very soon in my opinion, and we could be heading down to 39 cents. So I've got my eyes on 39 cent. If we take that out, then obviously it's going to be very diabolical, and we're going to have to at least take out these lows and potentially start putting in new all-time lows. So that's all I see on the daily. If we come over to the 4-hourly, you can see momentum is slowing down on the 4-hourly. So what it looks like to me on the 4-hourly is we could be getting ready for a retest of the short-term moving average on the 4-hourly EMA ribbon, potentially even a fake out up to the 52 cent before we do start to head back down again. So this could be something like this, where we head back down and then we do what we did here, where we headed down and then had this bump and started to continue with the selling momentum on the squeeze mob. So once again, just to tie this all up in a neat bow, what I think is happening right now is the 4-hourly is saying we could be getting ready for a slight fake out or a retest of these EMA ribbons like we have done before. Sometimes we come to the midpoint of these EMA ribbons, sometimes we even break above the long-term moving average. So as long as we're below 56 cent, as long as we're putting in daily closes below 56 cent, then this short signal is still going to be very much intact and the EMA ribbons are going to start heading down. So on the 4-hourly, I think we're going to move up around about to 52 cent before we do have a further drop off. That is what the 4 hour is saying. On the daily, The daily is saying that we're going to start to head down, so it looks like we could have, like I said, a move back up to 52 cent and then pick up more momentum to the downside, potentially carrying us to the 786 Fibonacci at the 39 cent. Once again, the higher time frames are basically saying that, you know, we're losing selling momentum and we could just be having one quick fake out to the 786. So once again, I think we could have a dead cat bounce to 52, maybe even 56, retest the 4-hourly EMA ribbons before on the daily we do start to roll down to the 786 Fibonacci. We could even potentially have a fake out, break below the 786 and come down to, you know, these previous candle body closes around about 35, but nonetheless I do think we are going to be heading down to 39 cent now that we've been putting in daily closes below the 618. And just in general, I mean, the momentum looks like we are heading to the downside, so that's all I see for OGN. I'm not looking to make any more trades for this right now. I'm going to sit on the sideline and see how we react if we come down to the 39 cents. So that is all I see for OGN. Not really a good sign either that we've had a throwback into this bull flag, because this bull flag has been going on for a very, very long time now. So I'm going to keep this here just because I believe the resistances and the support on these two lines are very, very valid, but I'm not necessarily going to be focusing on a breakout of the bull flag even if that does happen. So keep your eyes on 52 cent. I think we could be coming there in the next 4 hours, in the next 8 hours or 12 hours. And then in the next day or so, I think we could be having a pushback down, a break below the 49 cent. That is your 618 Fibonacci before we do have a push down to the 39 cent and then potentially a big bounce around this region. So that's all I see for OGN. Once again, none of this is financial advice. Best of luck if you're in OGN. And yeah, cowboy out. Peace.